What's up? What's up? Hi, Alik.
Hello.
Hi. What's this all about? Where's Joe? Where is Joseph? How are you?
I'm doing fantastic. I beg your pardon. I don't use video. I have a complex setup.
No problem whatsoever. I am making sure here that we're on the right spot. I'm gonna jump off real quick and I'm gonna come back on, okay? I'll be right back.
Sure.
What's up?
What up?
What's going down?
All the things.
How you been?
I'm getting back to it. How you been?
I am getting back to it. Yeah, I took a break, right?
Hey, yeah,
Got burnt out.
I think you took a better break than I did. So
Yeah.
my father-in-law passed away, so I've been
Oh.
gone for the last 2.5 weeks.
Oh man, I'm sorry to hear that.
Yeah. So
My aunt passed away and we're gonna be driving to Twin Falls, Idaho here in September for that.
wow.
So yeah.
Yeah.
Yeah. I don't know if we're gonna, first week back here, I don't know if we'll have too many visitors today, but I didn't do a very good job of prepping. Are you, for you, those of you who are joined us already and don't know Keith's our Loan Depot buddy here. Actually, I have a new client in Maple Leaf that I need to talk to you about later, Keith.
Okay.
See if we can hook this guy up, or he might end up with a HELOC.
Is our other guy, is he really looking at a multifamily now?
Who, Josh?
Yeah.
I don't know. He's looking all the time. He's not a very good communicator.
Yeah,
I don't know what's going on.
he asked what it looked like to do a duplex at 1.5 million.
Not now.
So
Well, that's good.
yeah, I said you need to, you need more money in the bank.
Right. Hi, Renee.
Hey, Julie, how are you?
I'm good. How are you doing?
Great.
Hey, Moon.
Hey, can you hear me?
Yeah, we got you. How's life?
Awesome.
Hi, John. I don't know if I know you personally, John, but I can't wait to. How's it going?
Hi, good, thank you.
Yeah. John, are you a broker, a wholesaler, investor? What's your discipline?
So I'm a property manager with Windermere. I just started about a month ago and new to the industry, very new to the industry. So I'm excited about today's webinar.
Is that, I mean, it's not, we're just chatting. We're not having actually a formal webinar. Just our format is basically just an open discussion. But are you with Lori Gill and Associates or?
So I'm with the JMW group in Seattle.
Okay, cool. Property manager, awesome. Good stuff. Well, join us each week. We'd sure love to hear what's going on in your world, if people are actually paying rent, or if you guys feel like there's an uptick in the amount of landlords that are deciding to just bail out of Seattle and sell. That'd be good insight to share. That'd be a very great contribution you could make to us to bat around together.
Absolutely, yeah. As I start learning some more information, that's why I'm here.
Cool. Hi, Phil. How you doing?
Doing pretty good. How you doing?
Good. Phil, you're our lender buddy, right?
Yeah, lender, investor, I guess whatever I need to be.
I hear you. You and you were hanging with us down in Burien, right?
Yes, yes.
Anybody missing the beef cannelloni? I could use a little beef cannelloni right now these days.
No doubt.
No doubt. So Keith, what's going on in your world these days? Rates are still low. People still refinancing. Are you 50-50 between refinance and purchase? This is Keith Pitsch with Loan Depot, guys.
No, not at all. I'm more like 70-30 right now, 70% refinance, 30% purchase.
And do you think that's because of what? Just because there's more of people, there's not enough in inventory or what?
Well, the sheer volume, well, yeah, number one, there's not enough inventory. Number two, the sheer volume of people that have rates in the high threes or above they were never in the market to transact real estate anyway. They were always going to stay in place. So they're super excited to get an awesome interest rate and move forward. And
What are rates at today?
It always depends on your credit score and your loan to value. But 30 years is right in the mid twos, the 15 years down at the low twos. I priced out a guy yesterday when I got back from Ohio. He was like 30% loan to value, a 740 credit score, and he wanted a 15-year fix, and it was 2.125.
God.
I was like, holy crap. So I fully believe by the end of this year, you'll see the 15-year solidly under 2%.
You know, there's, I'm sure, an easy math equation to plug into my amortization calculator, but if somebody is on a 30-year, right, and they're making their payments, they're fine with their payment is whatever it is, right?
Yep.
And then you shift to the 15-year at, you know, let's say 2 points lower.
Yep. You're getting pretty close.
Are you getting pretty close?
Pretty close. Yeah, and I
Who wouldn't want to do that?
It's funny you say that because I had a client that I showed that I could take, they were currently like 4 years into a 30-year fixed, and I could put them on a 15-year fixed and it would increase their monthly payment by $140. But
geez.
It would cut off like 14 years of their loan or 13 years of their loan. And they're like, I just don't see it. And in my illustration, I showed them the life of the loan interest that they saved. They would have been saving about $140,000 worth of interest between the 15-year and the 30-year. I was
What a great marketing message that is right now, right?
Yeah. Oh yeah, absolutely.
Start planning, you know.
And I'm not necessarily jumping to the 15-year. I'm jumping people to the 20-year. Because the 20-year, definitely you get a better mortgage payment and you're dropping 10 years off your loan.
Yeah.
That's a huge thing. If you're a year or...
You want to do a podcast about that?
Oh yeah, absolutely. We
should. Joe, there you go. Got one. Ha ha. That's my goal. I got to get a podcast every week off somebody. So Keith, you're up. Let's
Joe,
talk
I feel like a sucker now. I feel like a sucker, Joe. I walked right into that.
Gotcha. Hey, let's do that soon, Keith.
Yeah,
like
anytime.
Next week.
Yep, done.
On a Tuesday.
Yeah, this should be fine.
And it doesn't have to be a long podcast, but let's cover that topic and what it means with low rates. You know what I mean?
Yeah.
Like you think you're at a low rate, but did you forget about your term and how?
Yeah.
Are you good with that? Sorry guys, we're having like a meeting right in front of you. That's how we do things around here. Hey Enrique.
Hello, hello. How are you guys?
We're good.
Doing great.
Enrique, meet your neighbor here next door to you on the screen, John. John is new as a new property manager with Windermere.
Oh, okay. Yep.
And
awesome.
Enrique is a long-term property manager, owns his own property management company. What are you calling it these days? You back to Jevons Property Management?
Back to Jevons Property Management. Yeah, I merged with Mind Property Management for about a year, and now unmerged from them. So back on my own, and much happier to be back on my own.
I'm looking at your other video neighbor. Hey, Matthew. How you doing? Unmic yourself there.
There we go. How's it going?
Good. What are you up to? Don't you do the Airbnb stuff, or what are you up to?
Yes, we do.
Yeah. What's your company name?
Brick House.
Brick House, right? And are you in Seattle area?
Yep,
You are,
I'm
right?
here in Queen Anne right now.
You're in Queen Anne, and you also do some stuff with Katrina, right? Or you did?
Loosely, we're
Okay.
friends.
Awesome. Okay. What do you guys want to hear about first? Do you want to hear about some loan stuff, some property management stuff, or some updates on Airbnb? You guys aren't going to vote? I'll vote. Ready? Somebody say something. Who's going first? Matthew, you're new, so you're going first.
Uh-oh. What do you want to know?
Give us the update. Tell us what your business does, and then tell us the status of the Airbnb, what you're seeing, the biz.
Sure. So there's 3 parts to what we do. Number 1, we provide technology and a bunch of support services to Airbnb hosts all over the world. That's most of our business. So it's not real estate per se. It's more real estate adjacent, where we're not actually managing them day to day. We also have a second part of the business, which is about 1/5 of the business, where we actually do manage properties day to day and basically work with real estate investors and turn it into a passive investment. We have a third part of the business that we're not offering to other people. We're just doing it ourselves right now, but we may in the future offer to other people, which is we're experimenting with doing gut renovations on properties and turning them into exactly what we think will perform the best on Airbnb.
Yep.
Possibly that may lead to us building out a construction remodel portion of the business.
What's your bread and butter of your bricks? It's called bricks.
Brick House. The bread and butter, we have a pricing algorithm that we developed that dramatically improves the overall income of the property by basically getting you higher prices and nights with high demand, and keeping your occupancy higher with slightly lower prices in periods of low demand, and doing that very strategically. And we combine that with a whole bunch of automation around different aspects of running an Airbnb and a whole bunch of best practices and kind of consulting and things to try to make for a better guest experience and better reviews, and just more efficient management. We're expanding in some other adjacent things. We've done a lot of buy-side consulting for people and helping them figure out what properties to buy and things like that.
What properties to buy to fit into an Airbnb model?
Yeah. Most of our clients come in already having a property. So they're a real estate transaction in the traditional sense, but we're, especially with real estate investors, seeing more and more that want to buy a property. And so we help them figure that out. We're probably going to be building out some extra capabilities in that realm over the next 6 months or so, particularly as I foresee a little bit of a drop in real estate prices. Could be wrong on that, but.
Well, drop your company info into the chat if you want, and everybody can check it out.
Yeah, and if anyone has questions on short-term rentals, please send them my way. We don't do much in the way of sales and marketing right now. Like, we intentionally keep a very low profile because our challenges are less about getting leads and growth and more about how to scale operations, which has been challenging for us. Okay. We get a lot of leads from existing clients, so that's kind of been our focus. But I love geeking out about this stuff, even with people that are not clients, and love just.
What are you seeing in Lika? Hey, Lika, I saw you on there somewhere. What are you seeing on the status of Airbnb these days, overall, like nationally, as well as just in the Seattle area?
So how long do you want me to talk for? I can go into a lot of.
Well, give us the 2-minute version.
Sure. So a couple things. We're obviously seeing some drops in revenue. We're seeing very uneven drops in revenue. We have some clients that are actually up year over year, and we have some that are dropping as much as 30 or 40% in year over year revenue. We're seeing secondary markets and kind of more vacation markets like Central Washington that are doing very well relative year over year. Those markets tend to underperform urban areas. And so urban areas have lowered, but urban areas are actually still better cash on cash returns, even though those central markets have not dropped by as much of a percentage just because they started off lower. We're seeing shorter average stays. So for a management company, that means a lot more work without necessarily that boost in revenue that you'd hope to get from that. We're seeing that people that are sole proprietors that are running it themselves and doing the turns themselves, and companies that are very hands-on are outperforming traditional management companies. I think that's partially because most management companies have very misaligned incentives where they make a lot of their money off the cleaning fee. And so they're incentivized to keep their revenue per hour of work high rather than their revenue per month high, which is where the investor makes their money. We have a different model, which works a little better with that, but we're seeing that people that are running it themselves are doing really well. We have a few clients that are management companies that are getting hit a lot harder than the clients of ours that are running it themselves. Airbnb as a company, and this is true of all of their competitors as well, it's not Airbnb specific, has been a lot less supportive and they cut a lot of their staff. And so customer service related things are taking longer to process. We're seeing that places with backyards and amenities are doing really, really well. Whereas, and the other thing that's really interesting when I look at our client base, so the vast majority of our clients run it themselves. Properties we manage have fairly consistently high reviews, whereas clients that run it themselves, some of them have very, very high reviews, some of them have lower reviews. We give them advice on how to do better, but it's up to them to still be friendly and smile, and we can't force them to do that.
I have a question for you, Matthew, in regards to the reviews, and that is the review. It's yourself that they're reviewing. So when somebody stays at a managed location, Airbnb location, right? When they go to place the review, they're reviewing your account, not the owner's account, right?
So, and there's one account that's for the property.
One account, but
it's all, there isn't like a distinction between an owner's account and our account. It's just one account.
Oh, okay. So then, yeah. So then what I wonder about is if you're managing a whole bunch of different places, some might be really nice and you've got owners who really want to keep the place up nice and they don't charge too much. And then you've got others that, you know, are just the slumlord ownership of Airbnb properties, right? And so how do you keep those properties from negatively affecting you?
So there's a couple things. First of all, not for that reason, but for other reasons, we tend to be a bit picky about who we bring on, and we won't work with the slumlord sort of people because I just don't want to do business with those people. Secondly, so there's these two different models. There's the ones that clients are running themselves, and then there's ones that we're running. The ones that clients are running themselves, each one has their own account. We're not handling anything day to day on those properties. They're doing all the operations. We take a much smaller cut for our technology and our support, but they're doing all the day to day on those. Most of those people are not real estate investors. They're people that are renting out a second or a third bedroom or a mother-in-law and things like that. Within those groups, they each have their own account. They have their own reviews. It affects them. And the ones we manage, we strategically early on, and to some extent, if I'm being, this is being recorded, so I shouldn't say that part, but for strategic reasons early on, we kept each property in a separate account. We've maintained that as we've grown for the most part. So even though we manage many properties, we have a lot of different accounts and we try to keep each property in a separate account. Partially for that reason, it also gives us more flexibility in a number of ways. We do have a couple of properties that are under joint accounts for strategic reasons, mainly for properties where it's likely that we're trading guests between properties and moving them around for different reasons because it's easier to do that if it's under one account. But for the most part, we keep a separate account per property and it avoids that issue. Properties
I'm gonna have us move on, wrap it up so we can, you know, I'm not trying to cut you off, but I am sort of trying to cut you off, just so we can.
So yeah, happy to answer any other questions people have and people want to connect over this stuff. I love geeking out over just about everything. And
did you get your question answered, Enrique?
Yeah, you
awesome. Bet. So, and Keith, or any lenders that are on with us, what's the financeability, I know, of Airbnb income these days? I know Albert had some hacks or some tips for Airbnb before this current, you know, situation that our economy and our world is in. Do you deal with any of that on your end, Keith, where people want to try and count premiums or, you know, all the strategies around being able to use extra premiums from Airbnb rental collections, or is that it's just like whatever market rents are, forget Airbnb is what you're going to underwrite to?
It's going to come down to a couple things on that. It's going to come down to historical averages for the last 2 years. And then it's also going to come down to your year-to-date profit and loss, because Airbnb's rental income, self-employment income, if you're not pacing where you were in 2019 as of year-to-date now, especially since we're now, 5.5 months into the lockdown, you don't get approved because your income is no longer stable. So those folks that have declining incomes, declining revenues, are not getting a loan on the self-employed or the rental front. So it's kind of a tough go right now for anybody that doesn't have a W-2, unless you're Amazon. I mean, they're doing good. So yeah, it's a very interesting time with regard to self-employment and like rental income. We're going to condition you, the investor, to prove that you've received your rents for the last 2 months, the most recent 2 months. If you haven't, we can't count that rent for you.
Yeah, we see the same thing as well with lenders that we're working with.
Yeah. So
has any of you out there been attempting to get a loan and having some trouble doing that with any of your properties or anything, or personally? I guess personally we don't need to know about, because that means whatever. But
I'm doing a cash out refi right now of a triplex and a single family home that I personally own. And with Banner Bank, both are going well. It took a really long time for the appraisers to get out there. It was the single family home, they went out a little bit faster after 3 weeks, but the triplex, it was 6 weeks just for the appraiser to go out there. And of course, he charged an astronomical fee.
Where's the triplex, Enrique?
Yakima. Yeah.
Yeah. Okay. Yeah, I'm trying to get a triplex done in Port Angeles right now. I'm like, oh man.
I've heard that some lenders are waiving in-person appraisals. Is that true?
Yes, that is correct. There's a lot of drive-by appraisals going on right now. In the case of investment properties and cash out,
you don't want that.
Those are still typically in-person, full-on appraisals.
As a real estate broker, when I've had some of my sales here this summer since all this began, where there's been, we'll say, homeowner renovations, for example, or something great about the property where I felt like if the appraiser didn't actually go inside, it was going to damage the appraisal, right? So, I mean, as a broker myself, I'm typically a listing agent more than a buyer's agent. I am 100% still getting, even though we're in this, crazy escalating market still, up until now, my experience has been, I am looking to deal with buyers on the other end that are willing to gap low appraisals if in fact they do happen. I haven't had one, which is a miracle on some of the escalations that I've had. I can't even believe it, but.
So are you saying the market's slowing down? Is that what
No, I'm saying that the prices are escalating far above the listing prices.
And I want to shade that if I could.
Yeah.
Here's the problem that we're running into, because I have dealt with a couple low appraisals. Julie, you did hit the nail on the head. If an appraiser is not able to walk into a property, they can't, their ability to gauge the condition of the property is based on your listing pictures, right? And then they're going to call the seller and go through, well, when was the carpet replaced? When were the appliances replaced, and what have you? What's very different in this market than, say, like 2016 and 17, where we were just crushing it left and right, is that as a total number of units, as far as that volume is concerned, we're down by like 37%, right? So there's 37% fewer transactions, which means there's fewer comps to continue to substantiate. So yeah, an appraiser can go out there and find 1 or 2 comps that have recently sold through that escalation process, but then that's as far as they go, right? They have to put 4 to 6 of them on the appraisal. So now they're dialing back to January and December, right, to find those other 3 comps to fill out the report. And that's where you're absolutely getting punched in the face with regard to old data that's not keeping up with new trends, right? So that's where we are in the appraisal world. It's a very interesting thing. And as we continue to escalate, the first couple rounds was fine, but now we're getting into the 3rd round of escalations as far as market cycles, because we had March and then June, and then here we are in the 3rd round. I call it every 2 months. It's getting sticky. I think you will continue to see more appraisals come in low.
Right. What's interesting also is that, with the unemployment numbers currently, the 600, what's the status? Anybody know? What's the $600 a week? ended the end of July. They're voting on to extend it. We don't know yet, right? Is that the status?
Oh,
Yeah.
it's a pissing match. It's sad.
I honestly think there's a decent chance we see that take a while, if at all, from what I've been hearing from some people on the Hill.
Mm-hmm.
Who was I looking to see that was here that I know has some rentals? Is that Paul on there, or did he jump on? Anybody have any? Are you there, Paul?
Yeah.
What's going on with your rentals? Do you have some rentals, or are you mostly still flipping?
No, we've got, I think, 20 units. And we've been really blessed that everybody's been paying rent. So.
And you're down in Pierce and Thurston, or what?
We flip in Pierce and Thurston, but all my rentals are in Tacoma, Lakewood area.
Okay. So still strong on that. So I don't think we're going to see what's up until now. This is the first month, right? You know, and you know, but what do you, Enrique, what's going on with all your stuff and yours and your?
Yeah. So far so good. Everybody's been paying rent. I've got one person who's been writing it out, not paying rent, but the rest, and this is across, we're now at 650 units. So they're paying. It does concern me though, that I do think that a bunch of the folks have been relying on this $600, you know, a week times 4 weeks, you know, that's enough to pay rent with. And now between the moratorium for Washington State being extended to October 15th and this, you know, big whack in income for folks, I think that next month we might see some more people not be able to pay. So.
Plus the people that got the PPP for their businesses are, if they got it straight out the gate, it's starting to wind down for them on that kind of stuff. So one of my good friends owns, rents her commercial space here in Seattle in the Ballard area. She owns a salon, a very popular salon, and she got the PPP money. And, you know, I saw her yesterday. I said, how's it going? She said, well, I'm hanging on to my money because I'm paying my employees. So we didn't pay rent this month on her commercial space because we're saving all the money we have left to keep our employees, because if we lose our employees in her business, to get them back is very difficult, right? And so I think we're right here at the start of the tip of the iceberg of a shift that's going to start unless they figure out additional funds for everybody, right? And then how long does it take them to get there, right? So just by facts alone, I mean, we're probably looking at several months maybe before people can even get money in their hands. I don't know how quickly, you know, can you, you know, or what happens if you have PPP? Are they going to check to see that you spent it correctly on your first round? You know what I mean?
They are for forgiveness right now, from what I've seen so far.
They're checking.
Yeah.
Right. So
they're not going very deep for the smaller loans, but they are asking for documentation for forgiveness. If you don't apply for forgiveness, though, you can just keep it as a loan.
Right. Yeah. What else? Ian, what's going on with you? Picking up some good properties?
Yeah, I'm still getting some cheap properties. The last one I got, they listed it for like 130. I got it for 28,000.
What? Where's that?
That's in Georgia. So we're gonna, you know, I closed on it last week. We're gonna add another bedroom, another bathroom on it, get it rented, and, you know, try to refinance out of it.
Is this like war zone, tough neighborhood stuff, or?
No, this is a decent neighborhood. I definitely stay away from the war zones. Like the last one I got for 50,000, I'm renting for 1350. So it's a
wow.
You know, so this one I think we're going to try to shoot for around 1,000. And I got another one under contract. This it's a house and 2 apartments, and there's like a double wide as well. I got that one under contract for 90. I'm thinking
Ian,
about.
sorry guys, we're going to do some more admin work in front of your face here. Ian, would you be willing to jump on the podcast and do like a couple case studies with us of the types of investing that you're doing?
Possibly. I need
Okay.
more detail.
Okay, I'll talk to you offline about that because I think it would be interesting. If you, I know you probably think, well, you're going to give away some secrets, but trust me, nobody actually ever does anything. Hey, say it's in front of your guys' face, but
See, I just want everybody to realize that Julie is a closer. She just asked the closing questions, and that's why she's successful.
that's right, guys. Right on. How about you, Moon? What's going on in your world? Okay, he'll come back to us. Anybody?
Julie, I would love to hear like what's happening from for the folks that are working like in the franchise firms, or maybe John T. can tell me about Windermere and stuff. Like, are there brokers that are getting out of the business? Is it getting any tougher? Is it what's it like for the firms nowadays? Since I'm just my
Are you talking from a property management standpoint?
No, I think it from sales side of things.
That's a great question.
Yeah, I don't know if anybody else wants to answer. Does anybody else want to answer? Or I'm happy to see what I'm noticing. I am, might be, I don't think, I haven't noticed anybody bagging out of the business yet myself. I think that business is picking up, or, it's like any other business. If you take action, you're going to get business right now. And I think that there is, for those people that are willing to take action, there is a tremendous amount of business that's going to come. I used to send out, Joe and I did a lot of direct mail back in the day. And I've started to get people calling me, that are just calling me out of the blue, right? So I feel that people are getting ready to sell, and I think that they're going to want to get sold before winter. So I think we're going to have Keith, we were talking about in a while ago, like inventory being low and being down. I checked like in June, year over year for Seattle for just single family residential. And I also saw like a 38% drop in inventory year over year. But I think it was Rory Boone that posted something on Wari that here maybe in whatever he just checked, or some Forbes article, or I don't know what it was. Maybe it was a national article. I don't know. But that inventory is now up year over year. I have to go back and look if that was a national look, or I think it was just Northwest MLS. No, it was Offer. What's that guy's name? Somebody posted something somewhere that said that inventory now was ticking up year over year. And I am sensing that we're going to have a flood of people putting their homes on the market to try and beat the rush of the winter. So I would encourage everybody to stay in the business, right? And learn how to do marketing, or, some, even just cold calls, and you're going to get business right now. Somebody else on my team yesterday told me that they've noticed a dramatic increase in the amount of pre-foreclosures that have gone on to, just in the last couple weeks, onto Zillow in West Seattle. So, if you're of the servant mindset and you're going to help people, no matter what discipline you are, I think there's going to be business opportunities for people no matter what discipline that you're in. And the only people that will drop out are the people that just don't have any skill sets to push themselves forward or to get the training. I haven't noticed anything yet. Has anybody else noticed anything? I know there's a couple people that
I don't know, but I'm looking at the Federal Reserve's housing stats, and months of supply is still nationally at 4.7. It hasn't ticked back up at all. So
yeah,
that's local.
I'll have to, well, I think it was local. I'll find where that was and I'll repost it on SIC, but
or is it like one little market niche of condos that are one bedroom that don't have a view?
Right, who knows, right?
Ticked up. Yeah, I love the fear-based mongering. It's awesome.
I do think that's interesting, though, that one of my agents on my on my team, who pays very close attention to data and stats, made that comment about West Seattle. I haven't gone and looked myself, but maybe that's related to people who, here's a question for you guys, people who took forbearance early on and now they're a few months in. What's happening? What's happening with people that took the forbearance? Do they get 3 months and then they're at some transition point? How's it working?
It depends on the bank. So it depends on the servicer that is offering this forbearance. Wells Fargo was advertising to people that they could go into forbearance for 6 months and have it added on the back end of their loan. They're also being sued, though, for giving people forbearance that did not show a need for it. They were proactively advertising it, probably to make it so they couldn't refinance and collect more interest on those people because Wells Fargo. Other ones are doing that fourth month after 3 months of forbearance, that it is all due at once. And it's just all over the board with how people are how financial institutions are deciding on what their rules are. It's crazy.
My first thought about the West Seattle thing is that the lenders are worried about all the bridge stuff. So anybody who took forbearance and expired their first tranche of that, they are preempting, kicking them, filing whatever to, maybe they're worried about the West Seattle bridge stuff and the values going down. I don't know.
Well, let me just dive a little deeper into what Duane said. If you are a mortgage holder and your loan is with FHFA, so Fannie, Freddie, or FHA, you by default got 6 months worth of forbearance. There was no negotiation there. If the servicer was going to extend forbearance, you have 6 months. Now it's when you get into all of the portfolio lenders, your banner banks and your smaller credit unions, that all their workouts are completely different. Same with the jumbo market. So the people that are in the FHFA bubble per the CARES Act have 6 months. The rest of them are all over the place. I don't, to your point, Julie, I don't think lenders are looking that micro at West Seattle. I'm just really curious if the lack of a mortgage payment is triggering whatever public database that Zillow is doing pre-foreclosure pings on and throwing them up there as a pre-foreclosure because there's no recorded payment on those properties.
God, how terrible for those people, because, then they get bombarded. It's almost like invasion of privacy.
And one more thing to Duane's point, Wells Fargo is now being investigated for automatically enrolling people into forbearance because one of the tactics of forbearance was to prevent them from refinancing and having that mortgage that maybe they just took out a month ago and haven't recouped their funds on because, or they haven't sold them or securitized them, then they can't refinance out of it. So there's now a full-on investigation going on with both Wells Fargo and Chase on whether or not they were just voluntarily at their own discretion putting people into forbearance. Again, a great bank that I do not know why it still exists.
Keith, didn't Wells Fargo get in trouble for something very similar by auto-enrolling their folks in programs that they didn't want to be enrolled in?
Well, they got their hands slapped because they were opening up erroneous accounts without authorization, written or verbal, from their account holders for credit cards, extra DDA or savings and checking accounts, the whole 9 yards, and they settled to the tune of like $58 billion. That was 2 years ago.
You would think they would have learned a lesson.
Yeah, no.
Thanks.
Yeah, crazy stuff. I mean, crazy stuff. Hey man, how's it going? I hear a little mini min in the background there. Well, good stuff. Anybody have anything that they're working on that they need help with? Little collaboration of the group to help answer a question, solve a problem? Anybody got anything, or you guys just all been at the beach all the last month?
I need a affordable roofing company in Bremerton if anybody has one.
I think I have one for you.
Great.
From Dave Billings. Email me, don't text me because my phone died. I have to go to AT&T today. And
Okay.
ask me to get that for you, and I will connect you with David Billings on my team, who's over in Kitsap. He's Mr. Kitsap, and we actually are working on something in Port Orchard that we need a roofer for. So I know he's got one for you.
Okay, cool. Thank you.
Yep. Anybody else have anything they need? Any needs?
I need a builder to finish a house. It's 90% complete. It needs a CO in Seattle.
Where in Seattle?
Um,
And
it's
what
been,
happened to your builder that got you 90% of the way? That's the better question.
well, it's I'm buying the house and it's not finished yet, so
Oh, gotcha.
I need to finish it. So,
What type of stuff needs to be finished?
well, to be honest, I just saw it, so I'd want someone to go in there and just kind of let me know. The agent told me it's about 100,000 away from being finished. So,
Well, if
yeah,
you
what
want
part of
to
Seattle?
email me where it is, then or whatever, then I can maybe help you.
okay, sounds good.
Unless you want to tell us what part of Seattle it's in right now, but either way, Julie at SeattleInvestorsClub.com. I'll see
Okay.
if I can help you. Anybody else got anything?
I've got one. I have a 3-bedroom home, but it's on a 1-bedroom septic, so we can only advertise it as a 1-bedroom on MLS, and we're just not getting any showings. And I think my only solution is, drop the price. But does anybody else have any brilliant ideas?
So it's a 3-bedroom house, and so it's advertised as a 1-bedroom.
Yeah, well, it only has a 1-bedroom septic, so
Right,
that's
yes, you have
all I
to do that.
advertise it as. And we can't upgrade the septic. I went to 5 different designers. It's too close to the water.
Okay. Well, I guess the question is that really the issue, or is it like the price? So if you,
I think the price is fine. If I could advertise as a 3-bedroom, it'd sell in a minute.
right.
So, but
I think
we've only
probably your marketing remarks and your photos have something to do with that.
well, I just don't think people are clicking on it, because they're searching for 2 or 3 bedrooms, and so it's not even coming up searches.
Right. Is it listed? It's listed on the MLS?
Yes.
Would have to look at it. What's your agent say?
Well, my agent's my son, and he's on our team, so we just flip him. He's not like a professional agent.
Oh, okay.
But
if you want to email me the listing, I'll look at it for you.
Okay, cool.
Julie at SeattleInvestorsClub.com or Julie at exprealty.com, Julie.Clark at exprealty.com. Either one.
Okay.
I'm not going to spend a lot of time on it, but I'll give it a once over.
Well, I appreciate it.
Just because I enjoy it. Real estate life. Anybody else? Anybody buying anything right now? No? How about go ahead.
Oh, yeah. We've, a couple of weeks ago, we had like 4 fixers come up. I mean, they were all on we have a pretty tight criteria. And we got 2 under contract. So, I mean, I don't know what was going on with fixers, but geez, it just seemed all of a sudden, we hadn't found anything.
Off the MLS or off from wholesalers, your own marketing or what?
Yeah, well, actually, one of them's from this meeting that I got. In fact, that meeting that you shouted out, that I'd be a good candidate for him. That's the one that we have under contract finally.
Awesome.
And then I got another one.
There you go.
Yeah. Somebody else was listening. They're going, geez, if you go to Squim, you go to Belfair. So we bought that one. So.
Good. Oh, was that with Jenny? Maybe with Jenny?
That was what?
With Jenny Moore?
Yeah. Yeah.
Awesome.
Jenny, yep.
Awesome. Jenny,
yeah, and I didn't want to buy it.
Good stuff.
I didn't want to buy it. The numbers didn't work, but Dave Billings pointed out it comes with an additional 5 acres, which, he might have a buyer for already. So.
Awesome. Jenny and Dave are both on my team, so that makes me happy. Yeah. Let's see. How about contractors and subs? Are you guys able to get contractors and subs, or are you feeling that? What's the pricing with construction? Are they available, not available? Are they just maxed out? What's the story there? Anybody?
They're
Nobody?
pretty busy right now.
Yeah. I don't know. Has anybody had any negative experiences with our market currently? You know?
We were trying to get, this is not one of our own properties, but we've got a large multifamily that we were trying to get a replacement to the entry system, electronic entry system.
Yep.
Throughout the building. And the contractor we were literally right about to work with went out of business, laid off a bunch of their staff, and then a bunch of other people we were planning on working with had the same thing happen. I was actually going to ask, does anyone here have any experience with entry systems in multifamily?
Are you talking about like the intercom system?
Intercom system, and then also access control system for interior doors as well as exterior doors.
You mean like a card system for the, or like a electronic keypad stuff?
Fob system combined with a call box, possibly with capabilities.
Email me and I have my own personal condo that I own. We have that entire system, and I'll just ask the manager who they use.
Cool, that'd be great. Thank you, Julie.
King is one that's pretty frequent. Door King is a system.
That's what we have right now, but they're not very featureful, unfortunately.
Yeah.
Hey, Julie, what's your email?
You can go Julie, JULIE.Clark, CLARK @exprealty.com, or you can go Julie at SeattleInvestorsClub.com. Either one.
Okay, whichever's better for you.
Go Seattle Investors Club for this group. What else, guys? Anything else?
If I may ask a quick question,
Sure.
Do you have any recommendations on, lawyers to speak with that, deal with the subject twos? Or I'm trying to kind of have some creative financing going on, as well as, the owner financing. And, I've never actually done it before, but I'd rather deal with a lawyer versus just trying to figure it out on my own.
I got something better for you. I got a better free version, so you don't have to pay a lawyer.
Oh, okay.
If you want to, Joe, do you know Mariska's email address off the top of your head? It's at Evergreen Success. Maybe you can see if you can find it and type it into the chat. Are you able to access the chat, Keith?
Yes, I see it up there right now.
Or let me see if I can pull that up for you. So our friend Mariska is expert in creative seller financing, sub twos, leaps options, all that stuff. And her email is Mariska, MARISHKA @evergreensuccess.com. And I recommend that you talk to her first.
Okay.
Because she will be the free version of getting you down the right path. I'll put her stuff here in the chat. Creative real estate financing questions. There you go.
All right. All right. Thank you very much. I appreciate that.
Experience with lease options by any chance? I'm looking into possibly creating a creative lease option structure for some people that we work with.
Yeah, lease options are awesome. Like one of my favorite things, even to use as just a broker, both as a broker and an investor. And so you need some guidance on that?
Yeah.
Then call Mariska.
Okay.
Email Mariska.
Thank you.
Yep. Or you can, if you get stuck, you can always reach back out to me. But she's, my skill set is that I have a deep and awesome Rolodex. So I surround myself with all smart people. I don't have to be the smartest. I just know who to point you guys to. There you go.
I actually have a bit of a out of left field question, something that I don't know being done. So I have some team members that do a lot of work on properties that we have an ownership interest in. And something that's common in the startup world is to give people equity that vests over a period of time in return for their joining a high-risk early-stage startup. Is it at all common or done where people get equity in real estate for doing work on a property and it vests over time if they stick around?
I was going to see if Min was still on the call, but yes, that's possible. Probably harder to find, but I know of an investor, you know, does 10, 15 projects, however many at a time, that I work with, that also Min works with, that was on for a minute. He jumped off, but where what he does is he because he has so many projects going on, he trains investors basically how to source deals, and when they bring him a deal, he'll buy it and they will be the project manager. And so I think how he structures it is, if the rehab cost is 100 grand, right? Like maybe he gives them 10% of the cost of the rehab as their upside potential in the deal. He has some sort of structure. So the answer is yes. Maybe that's a good a topic to discuss outside of here sometime. Or you can look up Min. How do you spell Min's last name? We actually did a podcast with him. I want to say it's QIU. And his company is called Good as Sold Home Buyers. But he himself grew up in that situation. I myself gained in the commercial real estate and multifamily world. That's how I basically got started and gained all my wealth that, you know, started long time ago, is because I basically did all the work in exchange for a percentage ownership in the property. And was able to leverage that into more and more over time. So yes, that does exist, and it's a great model. I think lots of investors are cheap asses and greedy, and you got to find somebody that has the scaling mentality, where in exchange for you having some responsibility and really relieving them of a burden that they have or whatever, that you'll work, maybe instead of taking a wholesale fee or whatever, you turn that into maybe take a smaller wholesale fee and, you know, be a team player and get part of it higher than you would on your wholesale fee back in equity by contributing.
To be clear, we're trying to be on the other side of that. We're trying to provide equity to operators that do a good job in the short-term rental space within what we're doing. So we're trying to basically provide that opportunity to people that want to work hard and stick around for a while.
We'd be the
one that would be giving the equity, not taking it.
Okay. Yeah. I don't know. I'd have to talk to you, probably too big of a conversation for today, but happy if you want to call me sometime and just talk shop. I'm always love to talk shop. I like to do that in the evenings more than in the middle of the day, but anybody who ever wants to call and talk shop, try texting me first, 206-910-2985, right? I like to do that in the evenings rather than in the middle of the day, like I said, but happy to do that with anybody about anything, because that's just the way it goes. Like it. Anything else, guys? I'm just looking at my list. Anybody have a credit repair company they like? That's probably going to be something we all need here going forward.
Joseph.
Joseph, okay, yeah.
Joseph Kidworth, yeah.
Yep, he's been on our podcast. So Joe, we've been a little lack on, for those of you that don't know, we have a awesome podcast that we love called the Nuts and Bolts of Real Estate Investing. You can find it just by going to the Seattle Investors Club website at seattleiinvestorsclub.com. And there's just a link for blog podcast. And we have over 120 podcasts on there that cover pretty much any subject you could think of at this point. We took July off, essentially. So what we've been doing lately is sending out sort of a podcast series on Friday the last few weeks. We're going to send one out on wholesaling this week. Joe Bauer, I just sent you that email if you haven't seen it yet. where we're basically packaging up some of our previous podcasts that we've done in a series on topics. In fact, Keith, I don't know if you know it or not, but you were in our series from last week, so thanks. The redo. Yeah, and that series was all about lending. And we love Keith here because he shows up and provides value to us as much as he can every week. And if there's any other lenders here on the line, feel free to, we want to, shout out everybody. You guys are all welcome to speak up. We don't play favorites, but we do mention people that show up and, participate, and that's great, right? Just because we get to know them. But look for that coming out. This week's series is going to be all about wholesaling. So if you want to be a part-time wholesaler, or you want to even know how to wholesale, you can learn in this series that we're putting out here. I think Joel put it out on Friday. Again, I'm working with my crew right in front of you guys. Joe, one of the things you might want to add on that I didn't add was a link for the ability to purchase for a very small dollar amount our personal wholesale contract. You might throw that in there, Joe Bauer, but if you want it, if you feel like it. But other than that, guys, it's 12:26 by my clock, and I appreciate you guys showing up today. We are just restarting again here as we're winding down, or getting closer to wind down the summer. Looks like Renee posted a credit contact. She works with Maria at Kidworth Group, right? That's the one we were talking about. Great. So in the chat, if you guys, this is all recorded. You'll have all access to this afterwards. We've got a Kitsap roofer. We've got a seller financing lease option subject to kind of expert with Mariska Pilch with her contact info in there. We've got some credit repair contacts. You guys all have my contact info, 3 ways and sideways. And other than that, I have nothing else today. It'll be interesting to talk to people maybe next week, a little get further into the month, see how August rental collections are going. Who has kids here? Oh, you guys are all going back to, nobody's going back to school? Yeah, so we're in private school, so ours is still up for debate. But was there, just on the personal front, did Inslee come out and make an announcement last night about anything or school-wise? Like he's calling it all off, no matter if you have private school or public school? Does anybody know?
I didn't hear anything. I not in the know.
Yeah. All right.
Yeah, my public school shut down, so we're going to an online school completely. And I'm going to take my trailer and follow Jennifer Beatles all over the place.
Right. How fun, right? Well, hers is like what? Preschoolish age, right? Her little girl, I think. Right. So I don't know where Lika was, but Lika has a cool webinar coming up where it's like some 10-person quick series thing. I will have her post it in Seattle Investors Club. Looks like a good event. I want to say August 12th. Our friend Lika, who's a talented investor as well as a broker. So look out for that on the Seattle Investors Club website. I'll ask her to post it. But other than that, I have nothing. Join us next week, guys. Same time, same place. Our breaks are over. Back to work. Right?
Have a good one.
It's nice meeting all of you.
Yeah. We'll be back.
Thanks so much.
Thank you, guys. Come on back next week.
Thanks for the call.
Thank you very much.
Bye-bye.